Welcome to TheoTrade. This is Don Kaufman. It's February 1st, 2017. You are watching the Theo Night video. So, on this Wednesday, we had an FOMC announcement. What did it amount to? Absolutely nothing. A little bit of intraday volatility, but take a look right now. We got 2 minutes left to play in the period here. That's in the trading day. We have Facebook coming out directly after the bell here. Maybe we even catch it in the next minute or two. So Facebook is actually rallying quite a bit, but back to, more importantly, the S&P futures, because there's no doubt I see a bit of a pattern forming over here, and I'm going to discuss exactly what I mean by that statement. All right, so in early trade this morning, the futures opened and slid all morning long. The futures opened strong on the back of the Apple announcement. Apple, being the largest market cap, carries a lot of weight. But the S&Ps kind of continued to slide throughout the course of the trading session. So right here at noon, I'm on Mountain Standard Time, but at noon, the FOMC announcement released. The market rallied, but nominally. All right, so we're trading, at noon right around this 2271 level. Rallied into the 78 handle, faded off of it, tried to get bid back up, and when there were points today, we thought we were going to go down. We thought we were going to rally over here. The one thing, though, that really stands out, in terms of like a little bit of a pattern forming here, the volume in the S&P futures is really starting to pick up. So today, again, almost did 1.5 million contracts. We're going to clear about 1.5 million contracts by the time the futures do close over here. But we've had some really increased activity kind of on all fronts. And when you start to see the futures volume pick up, that's trading firms offloading risk. That's hedging activity. It's indicative, again, of more risk coming to the table. So that's one thing. The next thing that I see over here, you have a lot of different areas that we slipped in as the day progressed. Now, I'm going to come over here to the Russell futures for just a second. They slipped pretty immensely. There's the bell. By the way, right after the bell, we have an announcement coming out here in Facebook. So as I'm talking you through this, the Facebook earnings may be out here momentarily. Neither here nor there, although you can see on the bottom of the screen, all right, I got 100 shares. I'm actually short 100 shares. It's just for good keeping over there. So I do have a short position inside of Facebook. For full disclosure purposes, why am I short Facebook? Why not? Come on, they're an all-time high over here. And, I like to have some skin in the game. I like to bet against, markets from time to time. Sure, Apple's earnings quite spectacular. I bought an iron condor in Apple, of all things. In fact, you can even see I closed out of my Apple iron condor a bit earlier today. If you guys are curious about positions from time to time, yeah, I trade a little bit. I mean, today I'm firing off one lights like a madman, but I went out there yesterday and I actually bought an iron condor and then sold it today. So when everybody else was talking about selling premium, listen, you're not going to sell premium when there's no volatility out there. So I've actually been buying premium when there's opportunity. So the Facebook numbers, they're out right now. I have no idea what they are. It doesn't matter to me. It doesn't matter to me. Who cares? I mean, listen. You just look at the trade. By the time that you could even decipher, looks like apparently higher, by the time that you could decipher what the trade, even said, the algorithms are trading this right now. And they've got the news, okay, instantaneous over here. So, again, to keep this up while I talk you through it a little bit here on Facebook. And Facebook is trading higher. Not massively higher, but trading higher right now in the after hours. Facebook, though, was expecting a $6 and almost 50 cent expected move the rest of this week. Right now, moving about $3. Okay, well, almost $4 right now to the upside over there. Come on, I'm only short 100 shares, and the day is young. You still have to have, Zuckerberg come out and do his song and dance on the conference call over here. Plenty of room for the stock to go down, but Facebook actually bursting right now into all-time high territory. So with that, one of the things that is noticeable in today's trade, the markets, even prior to the FOMC announcement, were fading throughout the course of the day. And Again, which stocks, most notable. A lot of your transports out there happen to fade if you haven't looked at the transports lately. And I'm not that much of an old school trader. I know a lot of old school traders that do look at transports over here, but transports are having a pretty big downdraft in the last couple of days. Today closed for the most part unchanged, but they're having wild ranges on an intraday basis. And there's a little bit of news out there, but if you look at stocks like FedEx, that's a pretty slippery slope. Again, in the last 3 trading sessions, the same goes for UPS. There's some earnings, there's some other announcements over there, but they definitely have caught my eye. Another thing that's really caught my eye on an intraday trading basis was Bank of America. And this is just over the last 3 to 4 days. The magnitude of the moves is starting to pick up. And I'll take you now to intraday trade. Bank of America, after rallying all the way to 23.22, felt some sell-side activity. An area that I would expect as this week progresses, all we have left here is Thursday and Friday, is again an increase in volatility throughout the marketplace here. There are signs everywhere I'm looking right now of volatility starting to emerge. Here's also the XLF fading throughout the course of the day. There's no reason for this either. So why did the XLF, open the day extremely strong and fade throughout the course of the day? Neither rhyme nor reason. You can't really point a finger at the bonds, because the bonds, if anything, they sold off, which is supposed to be good for the financials. Then they rallied back up. Maybe that's causing the financials, a little bit of pressure out there. Nevertheless, there's nothing that you can put your finger on, but you can see areas of volatility starting to emerge in markets. Moreover, we'll take a look at something like Microsoft, for example, over here, getting hit on a percentage basis by 1.6%. Okay, Google in the last couple of trading sessions. Okay, if you're not following into Google once again only down about 0.6% today, but some follow through to some sell side activity. Again, Microsoft, all right, the last 3 trading sessions after the earnings announcements down heavily over here. When and where is this going to impact the broader marketplace? Now, sure, everybody's going to point out, well, yeah, Apple's at all-time high, and Apple is. Okay, we're looking here, and if you look at the high, well, let's back up for just a moment. You're just shy of it. What is it? The all-time high, 134 and change. I mean, Apple's approaching the $700 billion market cap. It's got a little ways to go, but it's exciting. Again, though, as I'm saying, you have a couple of tech stocks that are displaying degrees of volatility over here with Microsoft, okay, Google. Right. Again, we just had Facebook earnings. Hey, right now, that stock could be bid higher. 5 minutes from now, the thing can be down. Look at the irony of me saying that. It was at 137 moments ago, coming down a little bit. Okay. Amazon. Well, Amazon is actually due with this earnings later this week. We'll get more on that front. Another area here that's a little disconcerting happens to be the energy sector, which is, again, it's been off everybody's radar screen, but the way I see it, energy, not doing so good. And again, the expansion, all right, the expansion, if you will, of ranges on the day is what I'm kind of keying into. So again, let me go back over to the SPX and point something out. In the SPX options, okay, here's a 0-day option. These options have expired right now, but if you look at the options between now and Friday, they're only pointing to about a 10.3% volatility, which equates to about a $16 expected move. But the point to be made with that is, I'm going to go over here to think back, and I want you to look the entire week. So here we are again at February 1st. I'm going to go back to the 29th. And the reason I'm going back to the 29th is I want you to see what the volatility looked like earlier this week. And earlier this week, okay, and that's all I'm doing is going back to Sunday, okay? That's 5-day expiration. And earlier this week, the volatility was at 8.85% with a $23 expected move. As the week has actually progressed, the volatility is starting to expand. Now, again, there's not a whole lot to support a big expansion of volatility this week. Doesn't matter. Again, I see signs of volatility really starting to emerge right now. So you have to be a little careful here in the days to come. We start to rally up over there. I think a lot of traders might look to fade rallies. That ultimately means they're going to sell into rallies. And again, I'm basing this increased volume. We are seeing some expansion of volatility. We have some huge market cap stocks, okay, that are down considerable amounts, but they're being offset and kind of covered up a little bit by like Apple earnings or Facebook earnings, and maybe we expect Amazon to be good. But there's this like underpinning in the marketplace of a number of sectors that are not doing very well. We pointed out energy. We also pointed out that the XLF is seeing expanded ranges and a bit of a down move over here and slipping towards the end of the trading session, of course, today. So the XLF, we all know, that drove most of the rally out there. Transports, okay, drove a huge amount of the rally. Again, be very, very careful this Thursday, this Friday. And I don't have much more depth than about 2 days in this particular market. When I say depth, often I'm talking about field of view, like, hey, there's times where I'll get a feel for like a week, maybe 2 weeks out. Right now, come on, people, we're one tweet away from a 3 to 5% move in the entire S&P 500. Twitter happy fingers over there, okay, of POTUS can change the perspective completely in the markets. However, again, right now it does look like signs of volatility are emerging in the broader markets over there. All right, yeah, we're earnings heavy and people start to focus on the Facebooks and the Amazons over here. But what matters much more right now is what's going on kind of beneath the seams. And that is those sectors over there. Again, the XLE, the XLF, the transports, keep your eyes on them in the days to come. Thanks, everybody, for joining us here at TheoTrade. I'm Don Kaufman, back in our chat room all throughout the rest of this week. And, of course, we're going to have our pairs trading class this Saturday. That is February 4th. So join us for the pairs class. Thanks, everybody. Have a great evening. Bye-bye.